they'll be looking at a number that still seems like it's consistent with the first quarter's flare up in inflation being just that, a flare up, and again, not really derailing the disinflationary trend that started last year.
So give us your thoughts here, Sarah, about this economy here. I think a lot of folks are concerned that the Fed is too late in cutting rates, and that the risks of inflation, recession, are really there, and maybe the Fed's not recognizing them. How do you think about that?
Yeah, so when I look at the labor market data, and this isn't just about the July jobs report that we got a little over a week ago, but really the array of jobs market data, which shows that not only are conditions softening, but they're really back to where they were in kind of pre-pandemic, in some cases even mid-2010s. I think that you are seeing that downward momentum is concerning, and I think the recession risks have risen. But the good news is that the Fed has room to dial back the level of restrictiveness that we're seeing, and I don't think a recession is a foregone conclusion. But the Fed needs to get going in order to support the labor market, especially given that I think we've seen that disinflationary trend in place and no longer as much of a concern.
Sarah, what are we going to see tomorrow with the CPI at 8:30?
Yeah, so we're looking for a 0.2% increase on both the headline and the core. So that's in line with the consensus. But I think the details are going to be really important. So to what extent are we still seeing outright goods deflation? And are we seeing more progress on the services side, both in housing, but also the non-housing services that have been such a concern for the Fed?
So, Sarah, I mean, I guess, one of the issues here is the consumer. We're also going to hear from the consumer later this week. How's the U.S. consumer out there from your perspective?
Yeah, so the U.S. consumer is hanging in there, but we do think that households are increasingly constrained in their spending. So credit is more expensive, harder to get. So we're seeing less use of it. At the same time, not as much of that excess savings from the pandemic. And so it really comes down to the jobs market, and there with slower job growth, slower nominal wage growth, that means slower income growth as well.
Right.
And so we think that's where you get that slowdown in consumer spending, is consumers just don't have as much to fall back on. And so they're getting more cautious as a result, but you still have positive real income gains. And so that's keeping overall spending in positive territory.